Hi, folks. Nick Shaheen here, recapping the week ending in April 24th, Friday, obviously. Um, First of all, the scoreboard for today is a little confusing. Huge update for the Nasdaq, over 1.4% or 1.3% on the NDX. However, Brett's was negative, meaning it was probably due to the fact that we had strength in a few boxes. This is the Nasdaq 100. Microsoft up over 10%. When have we seen that? I don't remember seeing that ever. Amazon up over 14%. Starbucks up 5% almost. Google up 3 to 4%. 2 to 3%, I should say. So between these boxes account for all the positives. So if I neutralize these boxes, the Nasdaq would be flat. I'm not saying we shouldn't celebrate. I'm just saying why there's a discrepancy there. So the strength came in concentrated in big boxes, at least on headlines that are based on, you can call them fundamentals. They reported earnings and the street loved what they had to say. Look at the move in Microsoft. That's just an insane move in my opinion. Kudos to those who were long it. We had longs in Amazon and Google, so we coined some money there. But this is an insane move in a giant, like what, 40, 45 billion dollars addition in market cap just today alone. That's just massive. All right, so let's zoom out a little bit. Not zoom out. These are the indices as far as the S&P. The S&P closed up 0.2%, up 4 points, and probably in record territory according to media coverage. And the intraday moves were a little iffy in the morning, but then were recovered nicely, and then we sold off right here on strange heavy volume. I'm not sure what was there. Was a headline or whatever. There was an inverse, a head and shoulder pattern right here that I drew that matched, but I didn't see any commensurate headlines. Apple was the tiebreaker. It was going down when markets were going up, and then it started going up, so that took the markets back up when Apple ran back up. And they pinned it around 130 based on the open interest. That makes sense. What doesn't make sense is next week's expectations for Apple is 125 at this point. This can all change on Monday morning. Before they open, I'll update the members. All right, so let's zoom out and see where the week was. The week was, here we have the S&P, the NASDAQ, and the small caps. Speaking of small caps, today they ended red, 0.3 down. So 4 points down on the RUT, and that's about 40 cents down on the IWM. So the weekly candles are still all very well defined. If you look at the rising wedge, the green lines that I have up here, the S&P is bumping along the bottom end of it, so it has room to go. So if they wanted to be exuberant, they can reach up for, theoretically speaking, to the extension of that green line, which is what, $218? So 7 points from here. How fast they can get there, I have no idea. We do have higher lows and higher highs, so a miniature trend, you can see this thin red green line right there, and these candles span the whole thing. So it's gathering momentum to move, bust out, or break back down and give back some. Volume not too big, a little less than last week. These are weekly candles. Each candle is 1 week for 1 year. And as far as the NASDAQ is concerned, we have also a wedge, but it's rising and broadening almost. You see how it's getting wider and wider. These are highs, and I never thought we would see those, but it might be shooting for this end. So if it does reach up to here, it would still be within our ranges that are defined. That's why I want to step away from playing the weeklies and go out in time and play the monthlies and just give myself room to be wrong. And this is a very bullish candle. Opens at the low, closes at the high, and it breaks out this little thin green line like that we had here. Very bullish pattern. So Monday we have Apple's earnings, which is another giant box. I believe it's about 15 to 20% of the whole index. They still say 10%. I just can't see that happening. It's heavier than 10% in the index. But anyway, it will move the markets. So if they love Apple's earnings and they want to shoot it up, and I think it has room to go up, we'll look at it individually, the markets will run again. Small caps, rising wedge like the S&P, green lines, and we're bumping along the top, higher, closer to the top than the bottom. So they too can be gathering energy to break out. And if they do break out, it'll be like right up here, the target, 135, 32, 33, something like that, eyeball. Nothing is perfect in my world, but you'll see that. Volume a lot lower than last week. Volume in the Qs is a lot higher, not a lot higher, a little bit higher, but that's not surprising given all of the big guys that reported this week. So next week we have heavy economic data and Fed event and probably more rhetoric on the Greek problem. So let's talk about variables. We have the Greek issue is not going away. Yesterday's positive so-called headline I thought was negative, and indeed today was confirmed that it's negative. The Greek PMs want to do a speedy resolution with regards to delivering the reforms for cash. That, to me, sounded like they wanted, a haircut for the creditors. But I didn't think the creditors were going to lay down. So then the rebuttal from the Eurozone is no cash until the reform. So, chicken and egg type of a thing. So they probably will kick the can, and that may spruce some buying. We have the Fed event. If she hints at the fact that, okay, we've seen a lot of bad economic data, consistent, more so than just one-off thing for weather or whatever, the traders might buy it as to, like, guaranteed it's not going to be in 2015 a rate hike, therefore we will run higher. So it is a pivotal week, in my opinion, just from the words that we're looking to hear and the body language, so to speak. We have a whole slew of economic data coming out. We have consumption. We have all kinds of stuff we need to look for, but the big guy is the Fed and the Eurozone. And also there's some headlines from Ukraine coming out too, so I want to put that on the back burner to just that we're watching it. So we have a ton of variables to watch. So meanwhile, what do? Last week I said we can pick on a few winners, and I named a few winners that were winners. Can I chase them? I don't know. Some of them are really high at this point. I may say, okay, I may have missed a few. So let's see. That was the SPY breakout. The candle, it is a doji, but it's still a breakout nonetheless. So let's look at the Google. Now, I look at the Google and I said, okay, maybe I can try to short it a little bit. What? Yes. Well, it is positive that it hit this green line, and if it does break this green line, it could reach for 600. This is the Goog, not the Goog L. However, it's been here before several times. It's fallen. So why not take a stab at some debit put spread long term? I can rent them. They may cost 30 or 40 cents, and they may yield $4 if I'm right. And I have a few days to decide whether I want to hang on to them or not. So I can nibble. Okay, Amazon, the other big guy. We can't not mention Amazon. Look at that move. Oh my gosh, 14%. That is a monster move. So if I was long it and now I see this move, I'd say, okay, why don't I give it another whirl and test out a short for Amazon, debit put spread way out in time that gives me some time to be right, just in case the market said, uh-oh, we were crazy to go all the way to here. After all, the way I interpreted the results is they didn't say we found something new to make money. They just started reporting something they didn't, which is their web server business, and they broke it out. So now we're seeing what they've been seeing forever. So that's what the markets are positive on. And plus, I think they lost a little less money than before. So I like the company. I think they're ultimate growth company. But maybe this is too big of a move. Maybe. And just maybe. And if that's the case, why not test out a few debit puts? I'm not saying go out and short the stock. That'd be suicide. But the few debit put spread long term, say June or July, they will cost 30 or 40 cents, and they would yield $4 if they come true. So why not do that? Meanwhile, why not take a long shot and the Apple? Apple is a well-loved company that sells out of everything the minute it offers it on the table. So if the punishment comes from the traders for one reason or another, it should be only temporary, because long-term, if the markets hold up in general, Apple should be higher down the line. So if I wanted to play a lottery ticket on Apple, I either spend a couple of bucks for the weekly play or go out in time and spend a few more bucks and know that it's going to hold its value if I'm wrong for a few days. So with time, I would be proven right eventually. So the debit call spread would be good. Out in time would be great if somebody wants to put that much money in front of it. I can even finance some of it in a credit put spread that's well placed, well below like 110 or something like that, if I can find a proper level where I feel safe doing a $1 wide spread or something, just to offset some entry costs. So there are plays to be done. But overall, the market today was seemed bullish. We're closing at all-time highs everywhere, and if not our all-time highs, at intraday highs everywhere. But why is the breadth negative? Because it's concentrated in certain names. So we will need headlines to continue this fight higher. I'm cautiously adding to some credit call spreads, which are shorts, but I'm not doing it within the weeks because that would be a very tough trade. I'm doing it long distance and way up. I'm giving the market 4, 5, 6, 8, 9, 10%, depends on how far out in time I go, and doing some credit call spreads to collect some income. Nick signing out. Any questions about any of this? You know where to reach